Hi, I'm Bitumelo Ngwepe, an actuarial specialist at Sanlam Corporate Investments. Global and local equity markets started off 2023 stronger than expected, following a volatile year in 2022. The equity markets saw a sharp rebound in January 2023. However, by early March, the market had given back its entire gain, with the banking crisis sparking fears of a repeat of 2008. Subsequently, central banks around the world remained hawkish despite the risk of even slow economic growth. The negative sentiments from 2022 continued into the first quarter of this year. Fortunately, our Sanlam Umbrella Fund offers 3 protection strategies as part of the range of trustee-approved defaults to help protect members from such market volatility. These are the Sanlam Secure Strategy, the Volatility Protection Strategy, and the Sanlam Stable Strategy. Each of these strategies utilizes one of our smooth bonus portfolios underlying, or in the case of the Volatility Protection Strategy, partners a smooth bonus portfolio with an aggressive passive portfolio. These strategies provide various levels of guarantees and smoothing of investment returns for our clients, with the Sanlam Secure Strategy offering the strongest levels of guarantee to members following this strategy until retirement. Smoothing of investment returns provide for a more stable journey to retirement, with members not having to be concerned with the impact of market downturns. Our smooth bonus portfolios aim to provide stable investment returns even in an environment of extremely low and sometimes negative returns. The journey to retirement feels more stable, and members close to retirement do not have to nervously watch the markets every day leading up to their retirement date. As members typically have very little choice over when exactly they retire, exposure to the market, even in a balanced fund, may be undesirable. Take Joe as an example. If he was invested in an average balanced fund and retired 6 months later when Jane does, his retirement savings would be substantially smaller due to the market movements. But if invested in a smooth bonus portfolio, both Joe and Jane would benefit from the capital protection provided by these portfolios. Jane is in a far better position when she retires due to this capital protection. In the graph, we illustrate the gross returns versus inflation over the last 10 years for these 3 strategies. First, we look at the Sanlam Secure Strategy, our most conservative option with the strongest guarantee. Sanlam can never remove or reduce monthly bonuses once declared. Returns over the last 10 years have exceeded inflation by 4% per annum over the period. However, with sharply rising inflation and poor equity returns over the last while, one can see how the real returns has decreased over the short term. Next, the Volatility Protection Strategy has given fairly similar returns to the Sanlam Secure Strategy over the last 10 years, but with a bit more volatility. This is due to the change in the strategy. Since 2017, the strategy had a 25% exposure to the Satrix Enhanced Balance Tracker Fund, which is an aggressive passive portfolio. This passive component can add extra returns when markets are strong, but can lead to the strategy occasionally having negative returns. It is important that members note that the Volatility Protection Strategy does not provide a capital guarantee, but provides returns which are far less volatile than a normal balanced fund. Lastly, the Sanlam Stable Strategy provides monthly bonuses, roughly half of which are vesting and half non-vesting. In extreme market downturn, Sanlam may remove the accumulated non-vested bonuses, although we have not done so since launching the underlying portfolio in 1986. The strategy provided a real return of 4.7% per annum over the last 10 years, with very stable and predictable returns over the period. Once again, we can see the impact of rising inflation over the short term. In closing, our smooth bonus portfolios have continuously shown their worth, especially in volatile and uncertain markets as we are currently experiencing. These portfolios have remained resilient and delivered good inflation-beating returns while protecting members' capital. This is to ensure that members have a smooth, confident journey while saving for retirement.